Good morning and welcome back to Almus Market Mornings. Markets remain largely in a consolidation phase as investors await breakthroughs in tariffs, trade deals, and further data. Major currencies remain largely range bound, so did gold. Silver, though, continued to make new cycle highs yesterday, and yields saw a little bit of retreat across the board. Good morning, JK. Not much of moves yesterday. Your 2 cents on what investors should expect in the coming days.
Good morning, Swaraj. Yeah, you mentioned about silver. I think probably we should also be looking at the way platinum has rallied in the last, I would say less than 2 months. It has rallied from 887 to like 100 and 1,225, almost a 30% rally. So there is some, people are now shifting their investments into other precious metals since gold has had a very big rally and became quite expensive. I'm not saying that gold rally is ended, but at least there is some sort of a diversification that's happening. That's what we are seeing. There's also some interest in the base metals that is coming. Of course, a lot will depend upon how the trade talks between China and US goes, which is underway in London, and it is expected to continue today also. So far, indications are that the talks are going on well, but never believe these statements because eventually, what kind of agreement both parties do is very important. Yes, there was very kind of a lull yesterday overall in terms of economic news. We did have some news from China. A deflationary situation continued. The PPI year on year was down minus 3.3%. So the situation continues. So market starts to expect more supportive measures from China. Even the exports from China to US plunged almost 35%, even accounting for, big front loading of exports ahead of the tariff. This was one of the lowest numbers since February 2020, and that something that Chinese will also be taking note of. So I think all this points to China may be on the verge of some more supportive measures. So also in the absence of other key data from Europe and the US, we had statements from officials that we were looking at. One of the members from ECB, Cashier, said that we are almost done with the rate easing cycle, and there are downside risks to growth, but it would be a mistake to neglect upside inflation risk. So possibly ECB looking now at future inflation rather than growth that may be stalling because Europe is expected to spend a lot fiscal measures on infra and defense. Also, staying with inflation indicator, the New York Fed survey also indicated inflation expectations by consumers across tenors 1, 3, and 5. They all moderated a bit. No particular reason as such, but perhaps it had gone up. The expectations had gone up quite too far higher in the earlier months. So now it looks like that is getting moderated. Of course, while we did not have too much of data yesterday and possibly today also, it will be quite a light slate on the economic data. We are going ahead into the week with the expectations on CPI and PPI from the US economy, and the inflation number from India as well. This will be up. And then next week will be, of course, market will also be trying to assess what Fed does. Fed, of course, not going to cut rate or change it in any way, but then Fed statements in view of the latest developments. Also, the meeting by Bank of England. The Bank of Japan is also meeting. So, a good number of, policy policy events that are likely ahead. Of course, US-China trade talks is also important. Also, some bit of news on Japan is considering buying back super long government bonds. So there's a lot of focus on the bond yields. Of course, yesterday bond yields have retreated a bit after the inflation expectation number came, and also on the news that the Senate, which is now considering the the budget bill passed by the House, is looking to cut down a lot of expenditure, and so that's good news for the fiscal, and that's the reason why bond yields have slightly retreated. Japan is also considering buying back some of the super long government bonds, so another impetus for the bond market, which is now actually been struggling for quite some time. Staying with the asset market, of course, we have seen a huge rally. I just observed that most of the emerging markets have had 20 to 25% rally from early April. Particularly after the 90-day pause was announced. This includes Asian markets like Indonesia, Korea, and Japan. India itself has also rallied 15 to 16%. So it will be interesting to see whether this rally continues. Normally, when we have such a big move, we see some sort of a retracement or profit taking, and that could affect the flow of dollars as well. So if you look at the related currencies also, Korean won, Indonesian rupiah, and all that have all strengthened, including the South African rand and Mexican peso also. So I'm saying that emerging markets have had a good rally both in the currency and the stocks. This is now worth watching whether the rally stalls or we see some profit taking, including India, and whether the currency will have some retreat after a big rally. So that is something that I'm looking. But overall, dollar yesterday was moving in a very narrow range. Again, due to lack of factors. But I think the market is preparing itself to face the barrage of data that is going ahead. And the rupee also was not much of a volatile. We did see some dip towards 50, 85, 50. That was the lower end of the range, and then moved slowly towards 85, 75. Interestingly, Indian yields also, which we had indicated in our report post MPC meeting, Indian yields have gone up yesterday by about 6 basis points. This is mainly on profit taking because yields have been coming off. Not long ago, we were at 6.5% for 10-year, and we had dropped to as low as 6.25. So there is a bit of profit taking here also. Again, I'm seeing whether these sort of profit taking results in some sort of a slowdown in the FX flows, and possibly some dollar buying that can get initiated. We are in a consolidation phase, waiting for more data and big policy meetings next week. Till then, I think next 1 or 2 sessions, we expect a very dull session, movement only in the range, unless we have some unexpected news. Thank you.
Thank you, Rick. And just quickly summarizing, I think market participants would be keenly looking at the rally in silver and platinum as other precious metals apart from gold are garnering interest. Chinese PPI was down negative 3.3% year on year. So deflationary situation there continues and further monetary policy and other measures can be expected from the Chinese authorities to support the economy. Inflation expectations from the US moderated in the 1, 3, and 5-year tenor as per New York Fed. Today also will be a data light day because the upcoming week, though, there would be the CPI, PPI from the US, and of course the inflation print from India. When it comes to the rupee, we saw some strength initially, but largely remained range bound. Yields in India also went up higher after the RBI policy. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.